Welcome back. I'm Pratap here. Today is the 28th January 2025. In this video, I'm going to evaluate the performance of high liquidity zones identified in our previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars and it is a complete free training. All training videos are available at our NeoStock channel, YouTube channel. So at our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the community tab. You get access to this post. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. All the training lessons are available here. You just need to start our training from lesson 1.1 and scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time we release a new video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day report, our NeoStock software report, we identified 14 high liquidity zones from daily and 75 minutes time frames, and all these are all demand zones. Yesterday we did not identify any high liquidity supply zone in our software generated report. And also we got a very good number of trades today. The first one is Polycab. This is a daily high liquidity zone. Our software identified this zone as a rally base rally. So let me explain how I fine-tuned the zone. See, fine-tuning the zone is very simple. The concepts you learned in lesson 16, if you apply properly, it is very easy. Exactly the way how I am doing, you will also do the same. Some practice is required, that's it. So we have a rally base rally. This is what identified by our software. And I fine-tuned this zone with 75 minutes time frame. Here we have a 75 minute zone. We have a rally candle, 1, 2, 3, 4, 5 base candles, and again a rally candle. This is the 75 minute zone. This 75 minute zone again fine tuned with 15 minutes time frame. So within the 75 minutes area. So let's go to the 15 minutes time frame. Now let's look into the 15 minutes time frame. Here again you have a rally candle, 2 base candles, and again a rally candle. This is a fine-tuned 15-minute zone. And this 15-minute zone again fine-tuned with 5 minutes time frame. Let's go to the 5 minutes time frame. I'm sure everybody would have got a trade in this zone. The reason is it is no complication in this fine tuning. The zone structure is very clear. See here you have a drop candle, base candle, and a rally candle. Drop, base, rally. And I have fine tuned up to risk management point of view, type 2 proximal. Mostly we plan our trades with the type 2 proximal. If you feel risk is too small, you can even add a entry buffer, maximum 0.1% entry buffer you can use. But the risk should not exceed 2%. Always remember, risk should be below 2%, not beyond 2%. Okay, now this fine-tuned 5 minute zone, you see today what happened? Today at 10:35 candle, price has entered into the zone. This is the 5 minutes candle. If you want to see in 1 minute, see here 1 minute candle. At 10:36 1 minute candle, price has entered. Maybe a few paisa entered inside the zone, and then sharply it moved the prices up. Generally you keep some entry buffer, so definitely you won't miss your trades. After that, prices were moving towards the 15 minutes target zone. 15 minute supply is our target because high liquidity zone. So our trade is fine-tuned 5 minute zone, target is 15 minute zone. That's why always we get good profits. Sometimes some of the stocks trades may not reach 15 minute zone because some 5 minutes high liquidity zones or 1 minute high liquidity zones, they might be preventing the prices move up. At the time, cleverly you should identify multiple times prices are holding at some 5 minute zones or 1 minute zones. Is better to book the profit at that time. Multiple times, that is the way. 1 or 2 times, if they test the zone, don't exit the trade. Maybe next time the zone might be violated. If 2 times are tested, at least you should alert, and 3rd time probably you must exit the trade. That way you have to plan. Or you should start using trailing stop. Different mechanisms you can use. But anyway, here the price is reached and somewhere here you might have exited. This is the 15 minutes target. We have a drop base drop. And this is the one, see, today it pushed the prices down and then reached the target. When you got the trade at 10 o'clock 30 minutes. This is the 15 minutes candle. Let me go to the 5 minutes. 10 o'clock 35 minutes or 5 minutes candle. Probably you might have exited here 12 o'clock 15 minutes. If not here, probably in this candle 13.5. Okay. Simple, very simple. How exactly this fine-tuned 5 minute zone pushed the prices up. That is what happening every day for our HLQ zones. We've been observing the same thing for the last 15 months. Today is not the first day. Last 15 months. If at all, sometimes you feel difficulty when multiple order flows are there. Finding the horizon so that exactly you can assess where the real order flow. Maybe sometimes you may need some experience. Anyway, based on our HLQ done everyday analysis videos, you are learning those concepts. But some trades are very simple. See, today any difficulty here? Inside the daily zone, you drawn 75 minute zone. Inside 75 minutes, you drawn 15 minute zone. Inside 15 minutes, you drawn the 5 minute zone. Exactly prices reached there. You got the trade and then it pushed the prices up. Whether I draw this zone or you draw, fine tuning the zone. Whether I fine tune the zone or you fine tune the zone, the process is same. Whatever the zone I have drawn, you will also draw the same. There is nothing difficulty here. If at all, what is the real difficulty here? Accepting the trade. When prices are sharply coming, see here, prices are coming down. And by the time prices reach, some of you might be thinking whether this zone will work or it will be violated. If it is violated, say for example, sometimes zone will be violated. We have 20% chances. But 80% chances, the zones will give success. Suppose if it is violated, what you do? You just exit the trade. Anyway, your loss will be less than 2%. Many times you get less than 1%. These risks what you are managing. That's it. So you got excellent profit. How much profit Polycab has given? Polycab has given 24,187 rupees during the intraday, which is 13.3% ROI as per one futures margin cost. A simple fine-tuned zone. Those who completed lesson 16 without much experience, person also could have drawn this zone. Even without listening my everyday HLQs and analysis videos, those who completed lesson 16 could have also drawn this, fine-tuned the zone. By fine-tuning the zone, you would have got 24,000 rupees profit during the intraday. 13.3% ROI. You get this kind of ROIs for swing trades. You expect this kind of profits for swing trades like W80 trades and all, you get this kind of profits you expect. Or MIT trades. But our HLQ zone has given that kind of profit in just intraday. In how many hours it gave you the profit? You took the trade at 10:35 and probably you would have exited at 12:15 candle. That means in just 2 hours, less than 2 hours, you might have completed your trade. Okay, this is about Polycab, and the next one is ACC. ACC is a 75 minutes high liquidity zone. How our software identified this zone? Our software identified this zone as a rally, 1, 2, 3, 4, 5, 6 base candles and a rally candle with hidden body. This is what our software suggested. So this is the login, 14th January. Okay. And this 75 minute zone fine tuned with 15 minutes time frame. We have 2 order flows here. One is a drop base rally. You may say it looks like small candles just because of this. See this large candle with gap. Many times, what happens on the charts, they won't be visible properly. Now you see, it is a drop candle, big candle, very big candle, drop. You have a medium size of base candle and then again a big candle, rally candle. After that you have 3 base candles, rally, 1, 2, 3. And again we have rally with the hidden body, a huge high explosive lagout candle. These are the 2 15-minute zone. You may ask, the first 15-minute zone is not having any fine-tuned zone. Second one is having fine-tuned, you are seeing. With the dark color, you have drawn a zone that you will see in 5 minutes time frame. So that means the first one will be violated. Generally, fine-tuned zones are not there. What will happen? There are 80% chances. That is what I explained in lesson 16. When a zone can be violated, 80% chances. What about 20% chances? 20% scenarios, institutions may create a new fine-tuned zone inside this zone and push the market up. Next retracement, we get the trade opportunity. So that is what happened. Few days back, institutions created a new 5-minute zone inside this 15-minute zone. Today we got a trade opportunity. And because this is not violated, we didn't get trade opportunity in the second one. Maybe in future you will get this trade opportunity in future once this 15-minute zone is violated. Okay, anyway, we have 2 15-minute zones. How we fine-tune this 15-minute zone? Let me go to the 5 minutes time frame. See here you have a drop candle, base candle and a rally candle. What about here? Here the structure is not really good. See here you have a big ERC candle is there, failed ERC candle. And this failed ERC candle, again rally candle, in between no base candles and a lot of consolidation before. So this is the area mostly it will violate unless institutions create a new order flow inside this zone. So they created a new 5 minutes order flow. When? Let's see. Here. It happened yesterday. Sorry, not yesterday, today. Today they created a dynamic zone. Today itself they created a dynamic zone, ACC. See here in the comment section also I have written dynamic fine-tuned 5-minute zone in 75 minutes HLQ zone. What is a dynamic fine-tuned HLQ zone? I explained in lesson 21.8 if I am not wrong. Maybe lesson 21.7 or lesson 21.8. One of these lessons I have explained. If anybody remember the lesson number, put the lesson number in the comment section. The dynamic fine-tuned zones. In lesson 20 I explained one of the videos. I think mostly it is in lesson 21.8 if I am not wrong. What is a dynamic fine-tuned zone? During the live market, institutions create a fine-tuned zones. Maybe it could be a 15 minutes fine-tuned zone, or inside 15 minutes it could be a 5 minutes fine-tuned zone. And those zones in the retracement, we get the trade opportunity. See today what happened? Prices entered into the zone. Institutions did not let this zone violate. Now they are started adding. Now you see you are seeing a balance here. Prices are moving in a narrow range. Now imbalance took place. Prices were moving up and next again follow through candle with medium size leg candle. So this is the way we got a 5-minute zone. And this 5-minute zone we got the trade today. Now you have to ask a question. You have to draw a zone like this. This is a type 2 proximal. Drop 2 base candles and rally. But why you reduced the entry? See here in the first candles low. There I have fine-tuned my 5-minute zone. Why? What is the reason? The reason is if you are going for type 2 proximal, this drop base rally including the stop buffer, the risk is coming beyond 2%. Beyond 2% risk, you can't take the trades. You have to reduce the risk. You have two techniques. First technique is position sizing. And F&O trades for small traders like us, the position sizing may not be easy. If you are a very high value investor trader, if you buy some 20, 30 futures, at the time you can do position size even in F&O. How many futures we buy? Hardly 3 or 4 or 1 or 2. That's it, right? So position sizing is not possible. Then what is that possible? You take deep entry inside. You reduce your entry until you get 2% risk. Either 2% or below 2%. Or if you reduce more, what will happen? There are higher chances you may miss the trade. That possibility is there. That's why maximum you keep it up to, if the risk is beyond 2%, keep it up to 2% level. Suppose you can't afford 2%, maybe 1.5%, but if you miss the trade, you should not feel, I missed a very good trade. You should not feel. So this is at 2% risk level. I managed this. The entry at this particular level, now 2% risk level. See today prices entered a little, maybe some 5 or 10 paisa inside and then started. That means we got the entry at 2% risk level. Those who did not, those who can't afford 2%, those who can afford only 1.5 or maybe 1.2%, you might have missed this trade. ACC trade you might have missed. Those who accept up to 2% risk, you would have got ACC trade. But anyway, whether I get or you get, that is a different story. But our software point of view, this is not about discussing my trades or your trades. I am discussing every day HLQ zone analysis videos to check the performance of our HLQ zones identified by our software, because we are claiming 80% success rate. So I want to maintain transparency in the data. Anybody at any time, by looking into the videos, how our zones are working, they will understand. That's why last 15 months every day. Only last July month I missed, but sometime I have to even upload those videos so that they will be available YouTube as a record purpose. Except that month, July month, all the HLQ zone analysis videos are available at our YouTube channel. Because it is a new concept I developed, HLQ zone strategy. No strategy in the market having such a huge success rate. No strategy in the market is giving such a huge intraday ROI for the futures point of view. With risk less than 2%. That is very, very important. We are minimizing the risk and maximizing the return. That is important. We developed such kind of system. Any supply demand zone traders, if they take an entry at 5 minutes, they will exit at 5 minutes supply zone. If you take an entry at 5 minutes supply zone, you exit at 5 minutes demand zone. But our HLQ zone trades are not like that. We take entry at 5 minutes demand zone and we exit at 15 minutes supply zone. That kind of assurance, at least 80% level. 80% level, that kind of assurance our software is giving. So many of the trades it is reaching 15 minute supply zones. Few trades, because of 5 minutes high liquidity zone or 1 minute high liquidity zone, sometimes they get disturbance. That also we will identify and we will exit at those levels. See, at 2% level, the moment you managed, we got the trade. We are lucky. At 2% risk level. At the same time, it gave a very good reward. Huge profit it has given. Great ROI it has given. Until this 15 minutes target zone. See here, you have a drop, base, drop and follow through candles. Till this 15 minutes target zone, price has reached. When you got the entry at 10 o'clock, 15 minutes, 15 minutes candle. Let me go to 5 minutes candle so that we know exact, much accurate way. We got the trade at 10 o'clock, 15 minutes, 5 minutes candle and reached the target at 13 5 minutes candle. So less than 3 hours we are in the trade. And if you look into the trade, none of these 5 minute zones are violated. We have drop, base, rally. Probably it looks like a 5 minute zone is violated here, rally base, but remember, see, this is a medium size leg candle. See, this is a medium size base candle. This is a medium size leg candle. So it is not a leg out, this is not a base. But here this is again a big candle. You have a drop, base, rally, follow through candles. Continuously prices were moving, finally reached the 15 minutes target. So how much profit it has given? ACC has given a profit 20,565 rupees, which is 16.7% ROI. This is also another excellent ROI. Next one is NHPC. NHPC Limited is a 75 minutes high liquidity zone. All these are all demand zone trades. We don't have any supply zones generated yesterday. Let me go to the 75 minutes time frame. How our software identified this zone. Here you have a 75 minute zone identified by our software as a rally candle. You have 1, 2, 3, 4 base candles and then a rally candle with some pro gap. Rally, base, rally. And this one again fine tuned with 15 minutes time frame. See here you have a drop candle, base candle, you have a drop candle, you have 2 base candles, a medium size drop, medium size base candles and then a rally candle with pro gap. And this 15-minute zone again fine-tuned with 5 minutes time frame. See here you have a drop base rally. This drop base rally is the origin for this entire 15-minute zone. Maybe it can be fine-tuned zone also. Again from here again you see drop base rally is created. Picking the orders. That means maybe this could be a high liquidity zone. This is drop base rally because it is having the ability to create a new zones. That means new order flows are again added into this zone. New order flows are again added into this zone. Apart from that, what happened? You are seeing this 15 minutes area, right? Within this area, I think yesterday, a new zone is created, 5 minutes zone, fine-tuned 5 minutes zone above this. Let's look into that. Look here. We have a drop base rally is created with pro gap. What is more interested for me is this pro gap. This pro gap is not there. I would not have focused on this because I would have considered both these are all medium size candle. Now you may ask a question. Still they are looking like medium size candles only. How can you say it is a zone? That is a question you have to ask. Yes. First instance I also felt the same. But what made me to get curiosity? This pro gap area. And moreover, these candles are there inside the 15-minute zone. So now one point clearly we know 5-minute structure is not good. When 5-minute structure is not convincing you, what is the alternative time frame to the 5 minutes? 3 minutes. Several times we discussed about this. 3 minutes could be a supplement to the 5-minute zone. Now go to the 3 minutes, you get clarity. This candle looks like a drop and here you get base candles and then you get with a pro gap rally candle. That clarity you get only in 3 minutes. Go to the 3 minutes time frame. So that's why such kind of analysis you have to do when you are analyzing the stocks. See here you have a drop candle, medium size. You have a base candle, medium size. And you have a medium size leg candle. If you have a base candle, medium size leg candle also you can keep in the base candle. If there is a leg out after that. We already learned. We have a special session when we can keep a leg candle in the base. Look into the important strategies and analysis videos. They are very important. Because important strategies and analysis playlist, you have all the videos that will help you to improve your experience level. Everybody should go through all the old videos whenever you get time. Some of our members completed all those videos. Today they are doing trading in a perfect way. So we have dropped 2 candles in the base and a rally candle. That's why 5 minute zone looks like this. Okay. So when it happened, this happened on 13th January. And today we got a trade in this. So these are the new zones created after. Is it a fine-tuned zone? Yes. Because it is there inside the 15-minute zone. Is it a reflection to this the 5-minute zone below this? No. Because if price is touched and again a new zone is created and started moving, we don't consider this zone because this is the origin. But this itself is the origin. It did not pick up the orders from the below one. That's why I have drawn this zone. Suppose let us assume these prices further went, tested, and now a zone is created, LOTL zone is created, prices moved up, then I would not have given any importance to this zone. I give importance to the one below because that is the horizon. But if you look into both these zones, is there any relation? No. The only relation is both are fine-tuned in the same 15 minutes zone. That's it. That is the only relation. So because for this 5-minute zone, this is not the horizon, definitely you have to plan. It may not be letting the prices below. Prices go below. That is what happened today. Today prices entered into this zone. When today at 11:15 prices entered into the zone and started moving and finally reached this target zone. This is a pierced 15-minute zone. Look into the pierced. This is a 15-minute zone. You have a rally 1, 2, 3, 4, 5, 6 base candles, a drop, and after that this zone is pierced. Pierced zones can be used because you already learned pierced zone strategies. Earlier your understanding was pierced zones means no, all institutional order flows are consumed. Now your way of understanding after lesson 28, your way of understanding about the pierced zones, maybe there could be a very strong institutional order flows in that zone. Maybe if anybody would have planned a pierced zone based on pierced zone strategy, if you would have gone for a short trade, you would have got an additional profit. But anyway, my interest is only on the HLQ zones because that is the one I am focusing more. But pierced zones also very powerful, don't forget that. Today I mixed one pierced zone trade in HLQ zone. Yesterday itself I gave you an indication. Yesterday HLQ zone analysis I explained that point. And today we got the trade. Okay. So it reached the 15 minutes target. How much profit it has given? NHPC. NHPC has given a profit 15,100 rupees, which is 13.2% ROI we got. See, today we got a very good ROIs. Polycap 13.3 ROI we got, ACC 16.7 ROI we got. Now NHPC you have seen again 13.2 ROI we got. So excellent trades. Okay, just now I talked about the point. Pierced zones strategy we can apply in HLQ zones. Based on that we got a trade. Which one? LNT. Yesterday we discussed LNT. See, yesterday we have LNT trade. Yesterday LNT trade we got successful trade, but before that, that fine-tuned 5-minute zone was slightly pierced. Slightly. It is within our stop buffer. The zone was pierced. And after pierced, again exactly the same area, new 5-minute zone is created. So that's why yesterday I told you, don't miss this zone. I told yesterday, don't miss the zone because it is using pierced zone concept. Probably the institutional order flow is very, very strong. That is what I told yesterday. Today we got the trade. Let us look into the trade. LNT. LNT is a daily high liquidity zone. I am not going to explain fine tuning the zones and all because yesterday HLQ zone analysis video I explained. Let's directly look into what happened yesterday. So time being, first let me delete this so that you will understand because the color is very dark. Let me go to the 5 minutes because this is the 5-minute zone. See here, yesterday what happened? We have a 5-minute zone here, fine-tuned 5-minute zone, and we got a trade. And yesterday supply was very strong. You know, yesterday it was a bearish day, right? Super bearish. Even then yesterday all our long trades worked. That is the power of HLQ zones. So maybe because of a huge supply in the market yesterday, what happened? This zone was slightly pierced. It is within our stop buffer. Slightly pierced. And then what institutions did? They had a huge order flow in this area. Because it is a pierced zone, many people what they do, they just ignore this zone, that's it. And moreover, this candle is not looking like a base candle. This is looking like a medium size like candle. Even then I suggested you yesterday, there is a drop base rally, you can plan a trade. You may ask a question, how can you take these deviations? How can you suggest a leg candle without a base candle could be part of the zone? These are the questions you can ask, because these are the valid questions. So why I suggested, I'll explain before that. Before I explain, see yesterday what happened. After that, the prices reached this target. They almost went near, they didn't reach. This is today's morning 9:15 candle. Prices further went and this 15-minute zone pushed the market down. Down where? Until this newly created drop base rally. Is price entered inside the zone? No. Because yesterday itself I told you, because this is a pierced zone concept, institutions created a new order flow. The order flow will be very strong. When the order flow is very strong, what is the care you have to take? There are higher chances prices may not reach into the zone a little before prices reach and it will move. That's why I added 1% risk. 0.1% stop buffer. The blue color line what I have drawn, the 0.1% stop. Sorry for my mistake. Again I made a mistake. Excuse me. 0.1% entry buffer, not stop buffer. Kindly excuse me. So the 0.1% entry buffer, the blue color line I have added. Today exactly that buffer. If in case if you did not have added this 0.1%, maybe you might have missed this trade. But those who added entry buffer, they would have been successful. HLQ zone's performance point of view, okay. Price enter up to 0.1% entry buffer, it is a successful entry. It may enter into the zone, that is okay. But if it does not enter into the zone, if prices reach up to 0.1% level, it is a successful trade. There are a couple of stocks today, narrowly 0.1% entry buffer, prices did not reach. With a few paisa before, maybe some 30 paisa or 40 paisa before, the 0.1% they did not reach. After that, the prices went and reached the 15 minutes target. I am not considering those zones as a successful trades because the entry is not triggered. To check the performance of our high liquidity zone, price must enter at least up to 0.1% entry. If they enter into the zone, that is even much better. It's excellent. That means everybody would have got the trade. If the price entered into the fine-tuned zone, it's the indication that everybody, all traders would have taken the trade. Why not 0. Because some people don't use 0.1% entry buffer. They may feel their risk is increasing. Different reasons. It's all about risk management. That's it. Risk management makes how many members are taking the trade and how many members are not taking the trade. If price really entered into the zone means everybody would have taken the trade. Maybe somebody at entry buffer they would have taken the trade. Somebody in between entry buffer and the proximal line they might have taken the trade. Somebody they took trade only at the proximal line. That's why I'm saying everybody would. It is a confirmation. But entry buffer there is no confirmation. Those who don't use entry buffers they may be missing the trades. But HLQ zone performance point of view, yes, it is like a executed trade. That's it. Because these are the rules we set in this strategy. All these things you learn in our course. Okay, now let's come to the point. Now you should ask the question, why we are keeping a medium sized candle as part of this? First of all, I thought this candle is looking like a small candle. At the same time, some people also may think this is not the small, maybe a little bigger than the small candle. Maybe smallest medium sized candle. See how different opinions we have. I am saying, I am considering this as a small candle. Small candle, even 100% body also, we can consider it as a base candle. When we have different of opinions, how to take the decision? That's why I told you previously a special topic I explained. 3 minute zone can be used as a supplement. It is not a replacement, but it can be used as a supplement to the 5 minute zone. If 5 minute zone, some clarity is missing, some ambiguity is there, then go and check in 3 minutes. If 3 minutes is convincing structure, then you can take the trade. If 3 minutes is also doubtful, don't take at all. Ignore that. This lesson I already explained. You will find this lesson in important strategies and analysis videos. That playlist is very, very important for people who are expecting to gain experience. All important HLQ zone analysis videos I am adding in the important strategies and analysis playlist. Other videos I am not adding into that playlist. If some learning is there, new learning, I am putting that video into our playlist. Okay. So this is really a base or not, base candles or not. To confirmation, go to the 3 minutes. Yesterday itself I confirmed, take this drop base rally. Why? Because I know this 3 minutes there is a base candles are there in the 3 minute structure. You have a drop candle, you have 2 base candles, you have a rally candle. That's it. You got the base. See how perfectly we have a rally candle, follow through candle. Excellent structure. We should not miss. Why we should not miss? Is it because the 3 minute structure is good? No. It's not because 3 minute structure is good. It is because our pierced zone strategy is enabled. Because of the pierced zone strategy, we have seen pierced zone strategy, the concepts you learned in lesson 28, they are very powerful concepts. Several examples I have given. Pierced zones. That day, using with the help of our software, we generated pierced zones. I think some 9 or 10 stocks were listed. Out of that, when we analyzed all the stocks except 1 or 2, remaining all stocks, they gave powerful trades. The new order flow within the pierced zone. See, this is a new order flow within the 5 minutes pierced zone. Because 5 minute structure is not clear, now you are seeing in the 3 minute structure for the confirmation, yes, there is a new institutional order flow is added. If 3 minutes is not convincing, we would not have considered this zone. So that is the reason why yesterday when I shown in L&T chart, I told you plan this drop base rally based on the pierced zone strategy. That is what I told you. Moreover, this pierced zone is a part of the HLQ zone. That is even much powerful. See today what happened? Price has entered but failed to reach the 15 minutes target. Go to the 15 minutes time frame. Let me show you. Failed to reach this 15 minutes target. Why? I have drawn a blue color line. Have you noticed? That is the area. Maybe I have looked into the 5 minutes and even 1 minute. There was no proper zone structure is available. Maybe tick-wise data we might have observed some zones. Like 15 minutes, 15 seconds or 30 seconds data. Because we don't have access to that data. That's why I have drawn a resistance line. You might be knowing support line and resistance line concepts in conventional technical analysis. Because before supply and demand zones, I used only those concepts. Support lines, resistance lines, channels. I was an expert in drawing those in a much better way in those days, olden days. Especially some 15-20 years back. See, that is the area. The resistance line is holding. We feel like, okay, there is some resistance line because of that prices. But actually, if you look into some tick-wise data, somewhere here, because while prices are falling down, right? somewhere here, some zone might be available here, that is holding the prices. See, this is the first, actually I see like this, the rejections I see. See, rejections are coming. First rejection, 50, these are the 15 minutes candle. Second rejection. Now again their price just went little, but still rejection, 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 rejection. When multiple times are happening, at least the third candle or fourth candle, you should take a decision. See, already this is the first candle, this is the second candle, this is the third, either in this candle or in this candle, you should take a decision. Is it good enough for you to get the profit? Book the profit and exit. Or use a trailing stop loss. But those who use a trailing stop loss here, today a lot of time would have been consumed here. You might have lost your time. During intraday, saving the time is also important. If you already get a good profit and if you exit the trade, probably you can use that capital for taking some other trade. And L&T already gave more than 6% ROI till this blue color line. What is our average intraday ROI? 6%. That is what we are claiming, right? Already it went beyond 6%. So that way you have to take a decision. Okay, I got at least the 6% is actually the maximum expected profit. Of course, this is average value. Sometimes you get 13%, sometimes you get only 3% ROI. That average you will be getting around 6%. So that way you should have booked your profit. And how much profit you would have got in L&T? 6,232 rupees profit, which is 6.8% ROI it has given, close to 7%. See, this is a fine-tuned 5 minutes piercer zone strategy in daily high liquidity zone. And moreover, I indicated this yesterday itself. Yesterday HLQ zone analysis itself, I already made my statement. Focus on this area. You can apply piercer zone strategy here. That is what I told yesterday, and today luckily we got the trade. Why I am saying luckily? Because our software again listed this stock near the demand zone. If our software did not list this stock, you would not have looked into this stock. So that way it gave the trade and it gave an excellent profit. 6.8% ROI on futures margin cost. But my discussion on L&T is not yet completed. But before that, the one I deleted, let me add that. Where is that? Yeah. See, this is the drop base rally. With entry buffer, trade you got, right? But see what happened the last 10-15 minutes before closing the market. Prices entered into this pierced zone strategy, the new 5 minutes, fine-tuned 5 minute zone, but this zone is as per pierced zone strategy. See how sharply prices moved. Supply is also very strong. The entire supply is consumed by this 5 minutes. Earlier you got the trade from entry buffer. Now price entered into the zone. See, market is falling down sharply. Everybody feel, okay, market is going down. But this 5 minute zone newly created and this candle not looking like a base candle. How well this zone worked. The entire magic is because of the pierced zone strategy concept you learned. These are the technique institutions are using. They create a pierced zone, institutions. Again they add a new order flow in that. If you carefully see, if you see properly, it won't look like a zone. But if you do deep analysis, what is the deep analysis? I didn't ignore this zone because I was thinking this is a medium size, okay, leave it is not a zone. Went one time frame below, got confirmation. It's not one time frame below. See, for 5 minutes, one time frame below is 1 minute. 3 minutes is only a supplement to the 5 minute zone, alternative. So that's why I went to the second opinion by looking into the 3 minute zone. Then I got excellent 2 base candles. Then I realized, yes, institutions are using pierced zones just to let us not to look into this area. See, what is institutions' goal? They don't want us to look into their areas. If they don't want us to look into their areas, what they do? They will create zones in such a way they are not convincing to us. Best example, you learned in lesson 9.3 and 9.4, hidden bodies and hidden zones concepts. Why we are focusing on those concepts in the early stage of our learning itself? Because that is the area institutions many times they keep strong order flows. They think they are not looking like zones. For normal eyes, it won't look like a zone because the candle looks like a base candles. The moment we add the hidden body, then only we realize there is a leg out candle is there. And moreover, we are using dynamic views. Because I've been always telling you, focus on the dynamic view. Because we are using dynamic view of understanding the zones, we are getting perfect trades compared to the other people in the market. See, last minute before closing, because there is no enough time, it stopped here. Market time, otherwise the price again further would have went up. This time it would have reached this 15 minutes target. Let's see what will happen tomorrow. Market will again continue from here and reach. But anyway, our strategy is limited to intraday. We have to exit. We can't take risk. It may work tomorrow. But why we can't take risk? To claim our 80% success rate, you must follow all the rules that I explained in lesson 21.3, HLQ zone strategy. So many points I explained you in lesson 21.3. You must understand all those points. Then only you get always 80% success rate, at least majority of the times. So this is about L&T. And the next one is Grasim. Grasim, we got couple of trades. And one trade is very interesting. Many of you might have ignored the trade. But why we should not ignore, I will explain. Second trade is definitely you will take. So where is Grasim? Grasim is a 75 minutes high liquidity demand zone. Let me go to the 75 minutes time frame. You have a rally, base, rally. This is what our software identified. It looks like today this entire zone is violated, right? Yes. But before that we got the trades. Go to the 15 minutes time frame. How we fine tune. Here we have multiple order flows. The first one is a rally candle. You have medium size rally, 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is the zone. And the second zone is here. Let me hide this big candle, you get clarity. You have a drop candle, 2 base candles and rally candle. You may say, this is a medium size candle, how can I use the leg out? But add the hidden body. The moment you add the hidden body, double the size you get for this. That much gap is there, that much hidden body is there. Now you will convince it is a rally candle, big candle. That view you have to see, that is what dynamic view. This is static view. What you see on the screen is static view. What you visualize in your mind and what you understand or what you observe, that is a dynamic view. The moment you add the hidden body, now you visualize this candle in your mind, that is a dynamic view. So drop 2 base candles and a rally. This is a 15-minute zone. So we have 2 fine-tuned 15-minute zones. Now these 15-minute zones, again I am fine-tuning with 5 minutes. See, am I doing any tough job here? No. Lesson 16, how to fine-tune the zones. Same thing we are doing, nothing more we are doing here. See, this is I consider this as a failed ERC candle, a big candle. And after that price moved in a balanced way. Here you see, balanced way. That's why, see how, this is how I take, I will, my decision making while drawing the zones. Simply base candles, that way I don't look into that. While your learners, first basics you will learn, and according to the basics you draw the zones. Now I am an experienced person. I know majority of ins and outs of these concepts. That's why in the first lesson, do you remember lesson 1.1? Clearly I told this point. This point I told. What is that point I told? When supply and demand are equal, prices will be moving in a narrow direction. Do you remember? Lesson 1.1 I explained. That looks like a very simple statement. But the moment you look into the charts, that is a very powerful statement. Because here institutions are fighting with each other. That's why prices are moving in a narrow range. Next, lesson 2. Do you remember? That is my favorite lesson. Imbalance. When demand exceeds the supply. See here? Prices are moving in a narrow range, and then demand exceeds the supply. Then this balance is changed to imbalance. Because there is an imbalance, you are identifying institutional order flow. When imbalance will take place? When institutions add a huge order flow, then the balance will be broken. Because balance is broken, that means balance is broken means all the demand supply is consumed here. No more supply. To make no more supply, institutions should add a huge order flow. In that huge order flow, lot of pending orders will be available here. Those pending orders next time when they are retracing, see, next time how prices are retracing into this zone. See, prices retraced in this area, exactly where the imbalance took place. Now very nicely prices are started moving up. But is it a tested zone? Yes. Tested zone, do you plan a trade? No. Unless it is a high liquidity zone. But we don't have proper confirmation this is a high liquidity zone. Because if there is any drop, base, rally, proper structure is there, we would have. But here some base candles are there, not really convincing because this is a medium size leg candle. So I am not convinced this is a new zone. But already here maybe institutions might have added a huge order flow here. See, today morning prices again entered into the zone. Morning 9:15 candle. And sharply see the huge rejection. And what is this? This is a high liquidity 5-minute zone. Because this is the area holding the prices. That's why this is our target. And price reached and it reached the 15 minutes target. When it gave you the trade morning 9:15. When it reached the target morning 9:25. In 10 minutes your trade is completed. Or 15 minutes, 9:15, 9:20, 9:25. Yeah. 15 minutes, your trade is completed in less than 15 minutes. But we can't take the trade. Why? Because it is a tested zone. When we don't have a confirmation it is a high liquidity zone and the zone is already tested, we can't take. Now by seeing multiple tests and also by seeing these rejections, immediately we get a doubt in our mind, maybe this is a high liquidity area, maybe this is the area strong institutional order flow might be there. See, during this rejection, institutions might have added a new order flow. That's why a sharp rejection you are seeing. Next time you don't want to miss this trade. At least we got some clarity. This could be a high liquidity area. When you get that point in your mind, immediately you can plan your trade. See, the third trade you can take. Because by this time you already got some confirmation by seeing multiple tests. This could be, that's what I am saying, 80% only we can say. 100% we can't confirm. Only software can confirm 100%. But 80% is okay for us, right? 80% scenarios, they are working as a high liquidity zone, failure chances are less. So with that confidence, we can take the next trade. And when we got the next trade again, 10 o'clock, 10 minutes. 9:15 we got the opportunity, we didn't take because it is a tested zone. Another reason, even if it is not tested, we would not have taken this trade because 9:15 candle mostly we avoid our trades, especially intraday traders. So due to that reason, even if it is a fresh zone, still we might have avoided this trade. But the third time when it came, we got a confirmation by seeing the price action, especially by seeing this huge rejection. I don't want to. These kind of rejections are a strong indications. So again here prices came and prices were moving. Again a new 5-minute zone is created. Failed ERC candle as a leg-in, base, drop with small gap. After that the gap is filled, prices entered. Multiple times prices are, this zone is testing. Maybe by seeing this, maybe you can exit here. Still you might be having some concern. Maybe this zone might, if violate, maybe it may reach up to here. If you feel like that, see, this is also does not allow, definitely you have to exit in this candle. If not in this candle, maybe next candles. See, the more and more you delay, what happens? Again the supply, again it will push the market. See, same area, if prices are moving, institutions might be adding new supplies into this area. And already we got a very good profit till this area. You see, we got 1:4 RR we got. See, 1:3 itself is a successful trade. But this area already 1:4 achieved before reaching 15-minute zone. And you already got a doubt that this could be a high liquidity zone. Better exit. How much profit you get is, suppose if it reaches a small profit. Anyway, this is also a 5-minute high liquidity zone. It is not a 15-minute zone. Go to the 15 minutes. It is not a 15. Here you have a 15-minute zone. Rally, base, drop. But this 5-minute zone is not letting the prices. That means institutions created multiple 15 minutes high liquidity zones and not letting. Their goal is simple. Their goal is this demand zone should be broken. That's it. That is their target today, the institution's target. Somehow it has to be. But they may not be knowing this is a high liquidity zone created by some other institution. Why? They may not be knowing because they don't have the algorithm I developed. When they don't have, they may not be, they know there is a zone. Institutions may not be knowing this is a high liquidity. But meanwhile, these institutions, see here we have two types of institutions. One is bears and another one is bulls. Bulls are very clever here. The bears institutions, they are thinking they have to violate this zone. What bulls are doing? They are consuming these orders. They are getting a lot of liquidity. And the existing pending orders pushing the prices again. By the time prices reach here, they book the profit. They are getting, that is what we did today. See, prices entered, we took the trade and again reached the 15, we booked the profit. Because this is a high liquidity zone, until the zone is violated, you can take as many as trade possible. If you would have taken this trade, maybe this trade would have been stopped out. That is okay, because compared to this profit, a small amount you will be losing in the next trade. But remember, this trade is also already gave 1:2.5 RR. But freshers, I am suggesting only 1:3 is a successful trade. But experienced people, sometimes they exit at 1:2.5 RR. Because they take so many trades in a short frequency. Continuously they take trades. 1:2.5 reached, exit. So don't get into that level. You must follow 1:3. That's why from your point of view only I am registering my Excel sheet also. Whether HLQ zone is successful or not. If 1:3 only it is successful, not 1:2.5. Actually, one experienced person's point of view, 1:2.5 is a successful trade. But our rule is very strict. Minimum 1:3 should be there, that's it. Because it is not. achieved 1:3 RR. I did not register this trade in our Excel sheet. You may ask a question, then we should have registered this as a stopped out trade. No. Clearly I told you, if a zone gives at least one trade, that zone is a successful. Here I am evaluating performance of the high liquidity zone. Is that zone is a successful zone or not? That is what my intention. It's not about how many trades I got or how many trades you got, how many of my trades are stopped out. That is not the question. If first time if this zone is violated without giving a trade, it is a stopped out trade to check the performance of that zone. Several times I told this point earlier also. HLQ zones, we keep on taking the trades. One day it will be violated. That violation is the first time we will register. If it is second time or fifth time or 100th time, we won't consider that stopped out trade. Until then we just enjoy the profits. Until then we register the performance of our high liquidity zone, how powerful it is. Because we know every HLQ zone will be violated at some time, but we never know when it is. Because we never know, until it gives the trades we take, the last one could be stopped out trade. That's it. So probably this could be our stopped out trade. Because it didn't achieve 1:3 RR. After achieving 1:2.5 RR, prices came. Now this zone is violated. And below you see you have one more fine-tuned zone. So what is that one more fine-tuned zone? Here we have this 15 minutes zone. We have a drop, 2 base candles and a rally candle. And this is the zone type 2 proximal entry we have taken. And today prices entered again in this area. But have you noticed? Because supply was very strong, at some point of time, this zone was slightly pierced. Slightly. Of course, it is within our stop buffer area. Whatever stop buffer our software has suggested. So within that stop buffer area. Slightly. Few points. And then again moving and reached the 15 minutes target. Here a new 15 minute zone is created. Let me go to the 15 minutes. See here, we have a rally base drop. A new 15 minute zone. This generally 15 minute zones, new 15 minute zones are created. Supply is very strong. Even then, our high liquidity fine tunes area pushed the prices until the 15 minutes time frame. And this zone is already pierced. Next time easily it is violated. Because it is a 5 minute zone is already pierced, you won't take second trade in this area during intraday. Once a zone is pierced, you won't be taking any trades in that zone again. It's gone. Finally, these entire zones are violated. See, Lord, so much of time, so much consolidation took place. By seeing the candles itself, we should not plan any trade in this zone. It indicates so much of consolidation. So many candles. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have a rally. We have 11 base candles. We have a rally candle. That's why see next time easily violated. Not only that, institutions again created a drop base drop. That means there was some more orders are there, given some resistance for some time, but not good enough. After that, this entire zone is violated, and this 75 minutes high liquidity zone is also violated. But we got the profits. We got 2 profits. This is from the high liquidity zone profit, and this is the fresh fine-tuned 5 minute zone profit. This is how Grasim has given 2 successful trades. First trade it has given 5,062 rupees profit, which is 4.7% ROI. This is from HLQ zone. And the second trade has given 3,862 rupees profit until the newly created 15 minute zone, and it has given 3.6% ROA. See, the newly created also gave 1:4 RR. See here. This has given 1:4 RR till this 15 minute zone. So that way Grasim has given 2 successful trades. Anything else? Polycab discussed, ACC discussed, Grasim completed. NHPC we discussed, L&T we discussed, and the only stopped out trade is today APL Apollo Cubes. APL Apollo is a daily high liquidity zone. So this is the daily zone. We have a drop, base, see, because of big rally candle, we got a very big zone. But okay, big zone lucky is we get multiple order flows. And here 2 order flows are there. Go to the 75 minutes time frame. We have a drop, base, rally is there. And here again you have this failed ERC candle as a leg-in. I consider this as a rally candle, failed ERC, because dynamic view, it is a rally, dynamic view. So 4 base candles and again a rally candle with hidden body. So 2 15-minute zones. And these 75 minute zones, not 15 minutes, 75 minute zones. We are inside the daily zone. Okay, now these two 75 minute zone fine-tuned with 15 minutes time frame. Look into the 15-minute zone here. We have a rally candle, you have 1, 2, 3, 4 base candles and again a rally with hidden body, a big candle. A dynamic view, it is a rally candle. Similarly here also this second 75 minute zone also. We have a drop candle, you have 1, 2, 3 base candles and a rally candle with hidden body again. And both these zones again I fine-tuned with 5 minutes time frame. Let me go to the 5 minutes time frame. See the first one here, the first one 5 minute zone is I identified a high liquidity zone and also it is the horizon to this 15 minute zone, fine-tuned zone. See we have a rally, 2 base candles rally. See it is tested and again moved, again tested, again moved up and again tested, again moved up, again tested, again moved up, again tested, several times already tested. It's a high liquidity zone and also it is the horizon for this 75 minute zone and also for the fine-tuned 15 minute zone. For everything this is the horizon. So obviously this is the area we can find a strong institutional order flow, maybe because multiple times already earlier tested, or maybe institutions might have cancelled their order flow. There could be 100 reasons. We may not be knowing everything. And today what happened? This zone is violated. For some time it holded the prices. See, small rejections. Why not big rejections? That itself is an indication the institutional supply order flows are very strong today. If the rejections are big, that indicates market will be moving up. Demand is very strong in this area. That way we can understand. See, morning 9:15 in the previous chart, what is that? Grasim. How sharply price moved in the zone, tested zone. That rejection is indicated. The zone is a strong area. Maybe it could be a high liquidity zone. That's why our third trade in that zone is a successful trade. Third time when prices came, we took the trade. At least HLQ zone gave a trade. So this is violated. Because it is, but one more fine-tuned zone, how we fine-tuned, let me explain that. See here you have a drop, base, rally, 5 minute zone. This is the horizon. From this horizon it picked up and again prices moved. But anyway, prices did not come until the second zone. Again institutions created a drop base rally and pushed the prices up. Here 15 minute zone also they might have created, but it is not good enough to qualify as a leg out. But here see, within this pierced zone, they created rally base rally again. Probably next time this area may work very strong, but we won't consider unless a 75 minute zone is there in this area. HLQ zone strategy you can apply. But our high liquidity zone strategy point of view, we need a fine-tuned zone. At least to get 80% success rate. And piercer zone strategy you can apply. Piercer zone strategy I haven't defined any statistics. But only a point we observed these zones working very well. Okay, this is about APL Apollo tubes and how much loss it has given? 1172 rupees. The stopped out trade, which is minus 1.1% negative ROI it has given. Okay, anyway, it is negligible compared to all the other trades. And within a short period, in case if anybody would have taken short period, the zone is violated. Your money would have been released after you you exited the trade, and then you might have invested the money in the remaining stocks because they are all successful. One of those stocks would have given you a trade opportunities if anybody took this trade. Okay, this is about and what about the other? There are a couple of stocks are violated, and we know those zones will be violated as per the concepts you learned in lesson 16. And one such kind of stock is Abbott. Abbott is a violated zone today, but we didn't plan any trade because it didn't have proper 5-minute structure. See, this is easily violated. This is a 75-minute zone. Drop 2 base candles and rally. This one fine tuned with 15 minutes time frame. They are very large candles. Let me hide so that you understand. See here, you have a rally, 2 base candles and a rally candle. Very large candle, this one. High explosive candle. Rally, base, rally. This itself is a rally candle. And 2 base candles. After that, see, all these are large candles, failed ERC candles. You can't keep failed ERC candles in the base. Maybe some people might be tempted. Okay, looks like base candles. Let me draw a zone, rally, base, rally. But see, all these are large candles. See, these are the medium size candles. So this is maybe you may consider bigger size within the medium size candle. But you see, you have even more bigger, this one. So that's why this is the valid zone, and moreover, it picked up the orders from this zone. That way. Some reflections we are seeing from this zone. But within this zone, the order flow I am not happy because a lot of consolidation took place that you observe in 5 minutes time frame. The structure, 5-minute structure is very bad. So many candles. That way we can tell this zone will be violated. See here we have a rally candle. We have base candle 1, 2, 3, 4, 5, 6, 7, 8. Rally candle. That too, all these are all small candles. Even if you want, suppose if anybody feel this is a, I want to consider this is a medium size like candle, medium size base, rally, that way I want to draw the zone. Don't do that. When a lot of consolidation is there. See here, how I am looking, entire thing I am seeing the narrow range, lesson 1.1, how important you will understand now. When you listen the lesson 1.1 first time, you feel like as if it is a normal concept. But today, what I am explaining in the practical scenarios, compare with those lesson 1.1, what you listened, if you compare, then you understand the real essence of lesson 1.1. Why I explained those rules, 3 rules. When demand exceeds supply, supply exceeds demand. Third rule, what I told, when demand and supply are equal, prices will be moving in a narrow range. So that narrow range I considered. That's why I don't look into this as a medium size candle. If some up and downs are there here, like curve, some kind of curve, then definitely I would have considered drop base rally. But see, everything moving in a narrow range. That means balance is taking place. When balance is taking place within that area, if the candles are more than 6, there are higher chances the zone will be violated. See, within this area, timing forgot what kind of all the candles you consider as a candles related to balancing the prices. That way you look into them. For some time you forgot whether it is base or medium size candle or leg candle. But in a narrow range, this is a narrow range. A narrow range, all candles are moving. That means so much of consolidation took place. That means the power in this zone is gone. Maybe this leg out is because this entire demand and supply zone is consumed in this area and no more supply is available. Even with small demand, because supply is not there, you may see a big candle. Anything will happen. So that's the reason why. Some of you may say, see, there is a volume, very big volume is there. Remember, this is the volume consumed. This is an indication. Indicators, people, how they mislead with the volumes. That's the problem with the old concepts. People still adapted to those old concepts and they are not upgrading their skills. They are not upgrading their logical thinking. See, big volume is there. Because big volume is there, definitely this is a lot of order flow has been here. Remember, this is the consumed. This volume indicates consumed order flow. What we want, you want consumed order flow or you want pending order flow? Do volume bars reflect the pending order flows? No. You don't have any option to identify how many pending orders are here. This volume is only a consumed. Maybe the supply and demand is equal. Then only you see a buyer should be there, a seller should be there. And that is happening, you see huge volume. All the orders are consumed, but you want a pending orders here. Sometimes volume could be very small, but you might be having a big candle. Maybe that could be the reason. Maybe there is a lot of pending orders might be available here. That's why it is not reflecting in your volume bar. Consumed orders are very small, but there could be so many pending orders. Next time the zone works very well. Even volume is less. So that's why this is one of the reasons why we don't use volumes the way how we used the volumes in indicators. I already explained volumes in a special video. You please look into old HLQ analysis, important strategies and analysis playlist. Volume logic behind volumes also explained. We need volume, not for the zone specific. We want the overall stock should have volume. That volume confirms institutional participation is there in those stocks. Only 10,000 or 20,000 volumes are there, but you are seeing base candles, large candles. Do you think it is institutional zones? No, they are the retail trader zones. Institution zones means the overall volume in that stock should be huge volume. The last 1 month volume, last 6 months volume, huge volumes. That is indication in those stocks, institutions, every day they are participating. Such kind of stocks you have to select. So by default, at least 90% of the stocks in F&O will be having huge volumes. So institutional participation will be there. That's why I am focusing on F&O related stocks. Previously also I posted a few Excel sheets in our Telegram channel. Those stocks having huge volumes, because I developed an algorithm to find the average volumes and I generated an Excel sheet. That is the way I identify the stocks having huge volumes. Okay. Anyway, the structure is not good, easily violated. There is one more. Petronet is also violated. Let me check. Petronet is also a demand zone, high liquidity demand zone. we have a drop base rally, and this is a moreover 15 minutes time frame. Drop base rally is there, excellent structure, 15 minute structure. But look into the 5-minute structure. Structure is very bad in 5 minutes. That way we can tell. You have 2 leg candles, drop and rally candles, in between no base candles. See here, you have a rally base drop. After that rally, in between there is no base candle. You need a drop base rally is required. When a drop candle is there, after that a base candle should be there. We have rally base drop, supply zone is there. Next candle, that supply zone is violated. And that too, these two are large candles. Very big candle. This candle length is almost equivalent to this candle length, almost, or maybe little shorter. When you don't have any base candles, many times such kind of zones will be violated easily. And moreover, look into the distal line, we don't have any proper zone here, 5-minute zone, at least to consider any LTF zone is there. So that way we can easily tell this zone will be violated. That is what happened today. And moreover, you see, why it is so weak, market open itself below the zone. Let us assume this is having a fine-tuned 5-minute zone, still we won't take trade because market opened with gap down. When market opened with gap down, we simply ignore that zone. That's not a valid zone. That's it. And why it is gap down so easily? Because before itself we identified this zone will be violated as per the concepts learned in lesson 16. So these are the 2 zones we identified as per the concepts you learned in lesson 16. So that's why we didn't plan any trade in these 2 stocks. And remaining stocks I am not going to explain because already so many stocks, a lot of time it already took. Probably by this time the video could be more than 1 or 1.5 hours. So just quickly I will show you the daily time frame, not fine-tuned zones I am explaining now, remaining stocks. First one is Angel 1. This is the one narrowly we missed the trade. Otherwise we would have got a good profit. See here. If you go to the 5 minutes time frame, you will understand. We have a fine-tuned 5-minute zone here. See, prices came very close. If you add entry buffer, maybe with a few paisa or small, maybe 1 rupee or less, we might have missed the trade. After adding entry buffer, very short price difference, you will miss this trade. Otherwise, it would have given a very good profit. Maybe it might have given you another 10 to 15% ROI in between. That much profit it would have given. See the move, big move. But anyway, we missed this trade. HDFC Life, this is a daily zone. This stock is we already fine-tuned earlier, a long back. I already explained. Anyway, today prices did not enter into this zone. L&T and the next, what is the next one? M&M Finance. M&M Finance is also a daily high liquidity zone, and this zone is not having proper fine-tuned structure. Only 75-minute zone is there, but inside no 15-minute structure. So anyway, no trade plans in this zone. And Motherson. This is also a daily zone, and I think it is a tested zone, is it? Yeah, this is a tested zone. But observing carefully, because by seeing this rejection, but not for trade plan point of view. Anyway, today prices did not enter into this zone. I think Motherson previously, once I explained, if I am not wrong. Polycab we discussed, right? We got the trade, Polycab. Next, Tata Communication. Tata Communication is another daily zone, and this is a very old zone in the year 2023. I fine-tuned up to 15 minutes. Without 5 minutes, we can't plan our trades. Price entered in the zone. After that, it gave a big move and then again came down. See here, you will understand. See, prices entered and after that it gave a big move. It reached actually 15 minutes target. Somewhere here we have a 15 minutes target is available here. See here, it reached the 15 minutes target here. But we don't have enough data, 5 minutes data available to fine tune the zone. So that's why we didn't plan any trade. About ACC, Grasim, NHPC, Petronet I discussed violated, and last one is Zomato. Zomato yesterday I think we discussed. Zomato is 75 minutes trade. We didn't get any trade opportunity today to the Zomato fine tuned area. So these are the high liquidity zones identified. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.